Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined this week by David Bartosiak. And we have a couple interesting Zacks number one ranked top stocks, and they're not in similar industries whatsoever. I'm covering a restaurant chain, and Dave has a industrial manufacturer of like big equipment. It's an intriguing one, so you want to be sure to stick around to see what he's covering. But my stock is Shake Shack, ticker SHAK. And those of you who followed me on Twitter or Stock Twits for many years know I'm not exactly a fan of the stock. I love the actual product, and I go to Shake Shack, but the stock, not so much. And why is that? Because a lot of their growth has been just from opening new restaurants. And that's not real restaurant growth to me, but they've been turning it around on the restaurant growth. First quarter same Shack sales, which is, their same stores year over year, grew 10.3%. And yes, it's coming off of lower levels from last year, which was still kind of at the end of the pandemic. But these are good kind of metrics you want to see in restaurant chains. And the earnings are turning around too. Let's take a look and see why it has its Zacks number one rank now and what is happening with those earnings, because it's kind of impressive what's happening with the earnings estimates. So you can see if you look at the current year, 2023, on the earnings estimates, you can see that last year they actually lost 31 cents a share. But this year expected to make 15 cents. That's an earnings growth of 148%. How are they doing it? They are getting those operating margins up. In the first quarter, it was up 310 basis points to 18.3%. And that's what you want to see happen. It also helps that maybe some of their commodity costs have come down a bit in recent quarters. So that's helpful. You can see here we have three estimates that are up in the last 60 days for 2023. Also, the analysts are bullish about 2024 with four estimates being increased for 2024. And you can see another round of earnings growth expected for next year up to 26 cents. So this is what you want to see, and this is how you get a Zacks number one rank. Let's see what it looks like on the actual chart. This is an interesting chart as well. You can see the pandemic years, 2021 in the red, 2022 in that kind of dark blue. It started off kind of bullish and then, went down. The analysts were having to cut estimates for those years. The stock also finally sank by 2022. But you can also see in the 2023, 2024, and even 2025 numbers, the analysts are starting to get more bullish. They are actually raising earnings estimates. That's how you get the Zacks number one rank. And that means something good is happening behind the scenes. And it is the turnaround of the earnings is apparently actually happening. Now, the shares, let's look at this chart. This is the earnings surprises. The shares are up for the year and are having a nice year if you manage to time it right. If you got in at the very end of 2022 and thought, oh, this has been beaten up a little bit too much, but those shares hadn't been going anywhere for about 6 months, but we're going to take a chance on the one year to date, now up 89% on this nice rally. Over the last year, they're up 69%, but the 2-year stack, they're still down about 15%. And over the last 5 years, which is what this chart represents, it's up only 16%. Now, by comparison, the S&P 500 is up 61% on the 5-year, and NASDAQ is up 81% on the 5-year. So it's been a real roller coaster for those who bought 5 years ago, held on through all the darkness of the pandemic, those shares, busting out to new highs, but then gave most of it back. So where do we stand now? Things are looking up. It's still an expensive stock because it's only supposed to make 15 cents this year. So that gives it a PE of 518. But if you're thinking that they really are turning it around, even on the margin side, which it appears that they are, then maybe there's some more rally left into the tank. A lot of these restaurant stocks have rallied this year because we are coming out, and even globally, Shake Shack is a global company. They've signed licensing agreements recently in the last couple of quarters. They're opening up Shake Shacks in Mexico and in China under those agreements. And they are still growing their store count. They now, as of the first quarter 2023, had 449 stores, up from 382 Shacks a year ago. So it's still the name of the game for them for growth is to open up new Shacks. But if they can keep that same store sales number elevated, that's really what you want to see in a restaurant chain. And so far they're doing it. If they can keep that going for the next couple of quarters and into 2024, then that could be even a more dynamic turnaround and success story here with Shake Shack. So I'm going to throw it over to Dave now, who, as I mentioned, has a stock that's a Zacks #1 rank in a completely different area. And that's what makes this economy kind of interesting right now. We can have a restaurant stock and we can have an industrial, big equipment type stock also with the #1 rank. So I'm throwing it over to Dave to tell you all about it.
Well, thanks, Tracy. I've got my top stock pick of the week. It is Oshkosh, ticker OSK. Not to be mistaken with the Oshkosh Bagosh overalls that you all wore as a child, but I'm talking about the OEM automotive company. Let's take a look at Zacks.com, see why I like it. Oshkosh is a Zacks rank #1 strong buy. Check this out, too. We've got a Zacks value style score of A, growth in A, momentum of B, to around now with a VGM composite score of A. The automotive original equipment industry is in the top 47% of our Zacks industry rank, so things going good across the industry. Let's take a look at my favorite page here on Zacks, the detailed estimates page, where we can glean a ton of information. I like to scroll right down to revenue growth and earnings growth here. 5.48% revenue growth the current year, 5% for next year, a decent number. But take a look at here on the EPS side of things. 76% EPS growth for the current year, 24% for next year. Those are monster growth numbers. And it's been recent estimates pushing higher that have really helped us along. Over the course of the last 30 days, you've got analysts up at the ante for the current quarter, next quarter, current year. 2 have done so for next year. The impact on our Zacks consensus estimate up from 552 to 609 to 610 for the current year, 750 to 765, evening out at 762 there for next year. So a couple of monster numbers. And then the chart of all charts, the price consensus and EPS surprise chart. You can see here these multicolored lines are their evolution of our Zacks consensus estimates over time. The black line is the price. The little green arrows, earnings beats, red arrows, earnings misses. But note how these estimates, kind of for the most part, they all start high and they find their way lower throughout the course of the year. But check this out. There's been a bottoming out on these estimates, 2023, 2024, and beyond. That is a very good thing and could be the start of a new trend where this company is under-promising and over-delivering, which would definitely help the stock rock and roll. Another quick thing to note, when this stock was trading over $130 a share, look at where the estimates were, okay? You're talking in between $8 and $9 going out a couple of years. So we're right back to those levels. If you look to 2025, a little bit lower for fiscal year 2024. However, the stock is a fraction of where it used to be. It's down under 90, nowhere near that $130. So if this does a little bit of catching up, it could be a really great move over the long term. So there you have it. That's why I have Oshkosh as my top stock pick of the week. Don't forget to check out Zacks.com/promo for this week's promotion on Income Investor. For Tracy and I and everybody else here at Zacks.com, thanks so much for watching our top stock pick of the weeks. We will see you